Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you save money, still be a loser to inflation, but at least we're making more money on the interest that's in these accounts that are going to be mentioned. So savers are losers. We all know this. Inflation erodes your purchasing power. If the amount of money you're getting in your savings account is not meeting or exceeding the rate of inflation, you are losing money, literally. So what I decided to create this video was to show you about 4 or 5 places where you can park your money right now, where you'll get essentially a risk-free, almost guaranteed rate of return with at least 4.5% or so, going higher as we go along in the video. So let's get right into it. So the first thing I wanted to start with is a Vanguard money market fund. So I do a lot of talking about Vanguard funds. I have a lot of money with Vanguard, especially for my Roth IRA. Look at this dude right here. So when I went on the website, this dude is jacked. Look at his vascularity right there. Like look how serious he is signing this contract. Yeah. I think what his manager or whoever this model is, I think they want him to transition from Vanguard money market funds to action movies. Hey, how'd you start your career, bro? Oh, dude, I was in this Vanguard Federal Money Market Fund. But all joking aside, if you haven't heard of these things, there's a bunch of them. So if you scroll down here, you can see that a lot of these are yielding basically anywhere from 2.74%, which is not good right now, all the way up to 4.55, okay, 455 basis points. So some of you are probably getting, 3.3, 3.4% in your money market account or your high yield savings accounts. Again, this video will show you how to squeeze out significantly more, and I'll show you the calculations once we get further into the video. So the most popular one, or the one that I see people most talking about, is this VMFXX. Basically what this is, it's an open-ended fixed income mutual fund. It basically invests in high-quality short-term money market instruments issued by the U.S. government. So you can see right here, if I zoom in, you can see that the 7-day SEC yield, basically what this thing has averaged over the past 7 days, is 4.52%. If you look at the expense ratio, it's 11 basis points, 0.11%. And once you figure in taxes and things like that, which we won't get into because some of these things are treated differently. In this video, we're going to talk about like 4 different types of assets. But let's just say you're getting around 4.4% on your money with this, not talking about taxes. So basically what this does is it's pretty much an open-ended mutual fund. You have to invest at least a minimum of $3,000. People typically use this when they have their money parked in their brokerage account and they're not using it to invest. Like say they want a dollar cost average and not do a lump sum, for example. This is when they'd have some money sitting in this fund earning them interest. I mean, you can put up to however much you want in here, but it's not necessarily something that people seek out. It's just a convenient thing if you have Vanguard. So this basically benchmarks its performance off of the Citigroup 3-month U.S. Treasury bill index, and you can kind of see the benchmark down here. And you can kind of see since inception in 1981, it's averaged 3.88%. When we're in periods of super low federal funds rate or interest rates, you can see over the past 10 years, it's only averaged about 0.75%, okay? And then if you look at like quarterly after-tax returns, you can see your returns before investing on this first line. You can see your returns after taxes, and then you can see your returns after taxes on distributions and the sale of the fund shares. So this is just an easy way to park your money if you're with Vanguard. Most brokerages offer something like this. Okay, I know Fidelity does, I know Schwab does, but just be mindful of what that expense ratio is, okay? Now, here's a little love from Cleveland, Ohio, okay? So this is Third Federal. They're a pretty big branch of banks here in Cleveland, Ohio. They're national. I think they have locations in Florida, all throughout Ohio, those areas. But this is an online bank. I don't think you have to live in the states that they have branches physically in. It's kind of like a Capital One 360 where you can live wherever. It's an online bank. They give you a high interest rate. So this is cool because I know that this is a legitimate bank. This isn't just some random fly-by-night, high promotion, high APY. You don't even know if they're going to keep their banking charter in 10 years. This is a legitimate, bank that they have multiple branches all throughout Ohio and all throughout the country. So I got an email from them, I want to say 15 days ago or so, just a little over 2 weeks ago, and they're promoting their 4.3% online savings plus account. I'm not affiliated with them in any way. I do have a HELOC with them that I've never used, but again, they're a bank that I like, know, and trust. So if you're looking at stuff like this, you may want to look at like a bankrate.com. So Bankrate will tell you like, hey, you can sort by interest rates, you can sort by, whatever you're looking for. This happens to be one of the highest ones that isn't a, very exclusive like credit union or, club or something like that. This is accessible to pretty much anyone. The nice thing is there's no monthly fees. There's no limit on your monthly transactions. It is FDIC insured. The only two caveats is that it's going to be open and managed online, which is fine. To me, that's actually a benefit. And then you have to have a minimum of $5,000 to open and earn interest. So I just put in like 10 grand in here, I want to say about a week ago. I'm still in the process of getting that account created. Otherwise, I'd log in and show it to you. The nice thing about this is that you're not locking your money up. This is just a savings account. But if we are talking about locking money up, let's talk about the next thing on our list, which is a 5% annual percentage yield with an 11-month Capital One CD. Okay, so to get this rate, you have to deposit these funds, I believe, by March 14th, which you can see right here. So if you go down to the CD, a lot of people, when they think of CDs, CD just stands for Certificate of Deposit. You think of like your grandparents, right? It's like, oh, I'm locking up some money in a 2-year CD, It's just like, okay. To me, the opportunity cost is not worth it. But when you have something that's a guaranteed rate of return, essentially risk-free, 5% is pretty significant. It's actually more than that. So I'll actually show you why it's more than that. So if we want to calculate the savings at maturity, this is an 11-month CD. Remember, it's not a 12-month. So if we type in, let's just say we're investing $10,000 and it's promising us 5% interest over 11 months. This is actually coming out to be, if you can see this, 5.116%. So if we were to invest 10 grand into this Capital One CD, the yield at maturity would actually make $468 or $42.55 per month. This is actually compounded monthly, which is pretty cool. So it'll actually show you the calculation right here as well. I just wanted to do it on this because it breaks it down a little bit nicer. But let's just say an example of, hey, let's just say you are older and you have, 6 figures sitting around not doing anything with it. Well, guess what? At maturity, it's going to make you almost $5,000, $425 a month. That's nice. It could take care of, a lot of expenses at that age. Let's say you're sitting on cash on the sidelines, or you cashed out your brokerage account and you have $500,000 and you wanted to lock this money up for 11 months. Well, at this point, you're still losing money to inflation. We know this, but with half a $1,000,000, you'd be making right around $2,100 a month. For a lot of people, this could take care of a mortgage, a couple car payments, all their expenses and bills and things like that, and you'd basically end up with $23,400 more. Make sense? So before we get into our next asset class, which is actually yielding more than this CD, for a shorter duration, which is always good, here's a word from today's sponsor, moomoo. Today's video is sponsored by moomoo, which is a commission-free mobile trading app available for US, Singapore, and Australian users. It is backed by Futu, a NASDAQ-listed fintech that has been in the finance industry for over a decade. Moomoo offers impressive trading tools for both beginner and advanced investors. Some of the features include advanced charting, pre- and post-market trading, international trading, research and analysis tools, and most popular of all, free Level 2 US market data. I like moomoo because it is a platform that you can start using as a beginner and grow into over the years as you become more and more experienced as an investor. We can place simple buy and sell orders, but also start using more and more of moomoo's advanced research and trading features down the road. Since we're right around the corner from earnings season, I wanted to highlight one of the many features that moomoo offers, which is their earnings calendar. This is an insightful, clear, and customizable earnings calendar right within the moomoo app that easily displays the release dates of earnings reports for a specific date. All you have to do is open up the moomoo app, tap Markets, tap Explore, and click on Earnings Reports. From here, you can simply scroll through the calendar to see which company will be releasing their earnings reports on each day of the month. If you click on that company, it will take you straight to that company's detailed quote page, which is incredibly convenient. Whether you are a new or experienced investor watching this video, Moomoo is a platform that you can grow with over time. On top of that, they are currently offering up to 17 free stocks to those who make an account and make a deposit for a U.S. user. Australian users can get up to 110 Australian dollars worth of cash coupons to be used in trading with terms and conditions, which end on March 7th. Both are limited time specials available when you sign up via my link, so be sure to use the link in the description below to sign up and for more information about the promotion. Terms and conditions apply. Okay, thank you for sitting through that. It helps pay the bills and the cost of maintaining this channel. And I haven't asked you for anything in 5.5 years of doing this. Treasury Direct, here's our next buddy, but here's why this is so enticing. Because if we look at the latest auction results, you can see that this 6-month right here, T-bill, which is essentially saying, hey, government, here's my money. I was going to say something stupid, but it's going to offend a lot of people. Here's my money. Go do your thing overseas, setting up military bases everywhere. Oh, we could protect your freedom. All right, stop. I just lost half my subscriber base. Basically, this is a risk-free. It's considered to be risk-free. You are loaning the government money for a set period of time. They give it to you at a certain rate, and you are returned this amount of money at that set time. The common question that I get is, hey, your math is wrong. You're only getting a fraction of what this return is. How come, if you put in $100,000, why aren't you getting, $5,151 at the end of 12 months or whatever that number is? The reason for that is because these numbers are an annual percentage yields. This to make everything an apples-to-apples comparison, but you're only getting it for a fraction of that time. Remember, we're not holding this for a year. This is annual percentage yield. Annual means 12 months. We're only holding this for 6. Makes sense? Okay, so if that math doesn't make sense, I'll show you a real-life example. So this is my Twitter account. If you don't follow me, it's WhiteBoard Fin, F-I-N. I bought $150,000 worth of T-bills on February 14th on top of the $50,000 that I bought about a month ago. These are both going to mature on March 21st. So if this math doesn't make sense, here's a real-life example. So you have the par amount. This is basically the amount that you are quote-unquote buying. And then you have the price per $100, which you can see right here, and that gives you your investment/interest rate. Again, this is an annual basis. So if you remember that par amount, the par amount for the $50,000 purchase was $50,000. However, the amount that's being taken out of your account is $49,648.44. Okay, because what's happening is, you're getting this $50,000 at this discount right here. And this was only for I think a 2-month T-bill. So what happens is, whatever your source of funding is, this number's taken out. And then when that maturity happens, which should be March 21st in this case, I'm then deposited this amount, the par amount, $50,000, for a total of $351.56. Now, keep in mind, this is only for 2 months. It's an 8-week T-bill, which you can see right here. It's not a 12-month T-bill. This number would be much greater, and then this 0.9929 would be a smaller number, giving me a smaller deduction, and then this would be the higher number, and then which makes this a higher number. I hope that makes sense. So finally, the one thing I wanted to talk about was this Save Better website. So this is basically a website that kind of curates a lot of different local banks, regional banks, credit unions. This is why I talked about Third Federal first, because Third Federal is an online bank. I'm pretty sure you can sign up from pretty much wherever as long as you're a U.S. citizen. With these banks, there's going to be a little bit more stipulation, so it may not apply to everyone. That's why I saved it for last. But the cool thing is you have 3 tabs here. You have savings, you have high-yield CDs, and then you have no-penalty CDs. If we're just looking at savings accounts, this ADA Bank, and then Western Alliance, and then Great Lakes, and the Atlantic, and then the State Exchange, these all beat the 4.3% from Third Federal. I just don't know what stipulations you need to become a member of these credit unions or these banks. Now, if you look at their high-yield CDs, this is the highest one that I've seen. However, it's the same as the Capital One 360 at 5%, But look at the maturity. It's 17 months. You're basically locking up your money for 17 months, which in my opinion is way too long, especially if we go through price corrections. I like to keep a war chest of liquid money. So to me, this CD right here, the Capital One, is a much better deal because you're locking it up for 11 months as opposed to 17. However, if you look at this, you can get 5.151 for 6 months. So it's a smaller duration. It's backed by the government, federally tax-free. You don't have to pay taxes on the gains federally. You have to do it locally, though, on the state level. And it's 5.15%. So I hope this video helped you. I know this stuff's kind of dry, but if you're sitting on a bunch of money and you're scared to invest and you have tens of thousands of dollars or hundreds of thousands of dollars, or if you're saving for a home, for example, instead of putting it in the market, you can always put it in something like this where there's much less risk involved. That's why the interest rates are lower. Obviously, you have to realize this. As investors, we are compensated for the amount of risk we take on. So if something isn't risky at all, you can't be expected to be compensated a lot for it. If something's super risky, like a startup or venture capital or private equity, for example, then you're being compensated more because there's a higher level of risk. So I hope this makes sense. I've been grinding. The reason I didn't post for 2 weeks is because I interviewed 4 professors for WhiteBoard Finance University. So right now we have a real estate professor on board, we have a stocks professor on board, an ETFs professor on board, and a personal finance / budgeting professor on board. And if you don't know what it's going to be, it's basically just going to be a school. Think of it like a gym membership. You pay a monthly fee. You get access to everything. You get access to me once a week on a private live stream. And then also those 4 professors teaching you things every single week. It's going to be awesome. So I've been grinding. That's why I didn't post the last 2 weeks. That should be live within the next month or so. But we are trying to build out content ahead of time. So sign up for the waiting list down below. And then also thank you for moomoo for sponsoring this video. Have a prosperous day. Hey, Grandma. Yeah, I just bought some T-bills. Oh, you know the song we play when we buy T-bills? Okay, hold on. Let me put it on for you.